Hey everyone, so today I'll be highlighting the past month in investment markets and the recently proposed changes to the Stage 3 tax cuts. Please remember that this video is intended for my clients, family and friends and is general in nature. If you wish for personal advice, please do not hesitate to reach out to me. Alright, through December and January we have witnessed great returns in the stock market, with the US market hitting its highest point and the Australian market sitting very close to its peak. Therefore, what has caused this recent rally in the markets? So it has mainly come from confidence in the market, with speculation that the Fed may cut interest rates, many anticipating the first rate cut happening in March. Historical data suggests that when the Fed cuts rates and the US avoids a recession, the share market tends to increase by an average of 20% over the following year. On the contrary, if a recession follows, the market has historically seen a decline of approximately 10% on average. Therefore, we have to look at some of the key indicators of whether a recession is likely to occur. Now, when we analyse these key indicators, such as the current unemployment rate, it's sitting at 3.7%, below the long-term average of 5.7%. And the drop in the core PCE inflation, measures below the 2% target in the past 6 months, supports the argument against a US recession. Additionally, historical data related to elections since World War II shows that the US has only experienced a recession 4 times during an election year. Similar positive indicators are observed in Australia. With low unemployment, companies recording record profits and a decrease in inflation, making a recession in the near future less likely. Although if it does hit, it looks like it will be a small recession. Therefore, this is promoting a very positive anticipation for market performance. Now let's turn our attention to recent proposed changes to tax cuts, Stage 3. Nothing has officially changed and it still has to go through Parliament. But the Stage 3 changes are affecting those with higher incomes. The government has scrapped plans to abolish the 37% tax bracket, but the threshold will be bumped up to encompass incomes of $135,000 to $190,000 from 1st of July. The highest tax bracket, commanding a rate of 45%, will also be increased by $10,000 to $190,000. As stated, this has not passed Parliament yet, and therefore, if this should be passed, I will complete a breakdown of how the salary changes will affect your take-home pay. The main thing to note now is that regardless, you are still anticipated to receive tax cuts next financial year, regardless of your income. Now, thank you for your time, and should you have any questions, please do not hesitate to reach out to me at any time. As always, your financial well-being is our priority.